Welcome to TheoTRADE. This is Don Kaufman. It's August 30th, 2024. Just about 30 minutes stands between us and a holiday weekend here. Look, this marketplace, bottom line, it's just the suck before the storm. And I'm going to tell you exactly in detail what that means right here on this weekend's update. I'm going to jump forward right off the bat and talk about, as I said, what I kind of call the suck before the storm. What I'm actually referencing on that front is, not that the marketplace sucks and it's just grinding. Look, that's the obvious. Take a look actually at trade for like the last 2 weeks. I mean, literally the last 2 weeks. And this is the S&P futures, and we're absolutely dead. But there is an element of what I would term low liquidity, really just high impact trade that is wreaking havoc upon the markets, especially upon intraday traders. Look, if you're an intraday trader, that's somebody that's usually scalping on an intraday basis, just trying to take any intraday position. You got to be aware, okay, of exactly what I'm talking about with like a low liquidity situation. Low liquidity, it's not just about low volume. Like, it's low volume. It's not about low volume. Okay, yesterday, actually, the volume wasn't half bad yesterday. Yesterday, you did 1.5 million contracts inside of the S&Ps, and most products, including like spiders, they picked up a little bit more in terms of volume, but I'm not talking about volume. I'm talking about low liquidity. And what low liquidity really means is when you start to dig in, okay, to literally like, active trader here, and you start looking at bids and offers. Let's kind of highlight this for a second. There's just not a lot out there. And what I mean by that, and again, without digging into exactly what the size is, what I mean by that, there's lots of market making firms, lots of proprietary trading firms. They're not making markets of size right now. And what I mean, they're not making markets of size. They're just not heavily on the bid or the offer. So you get these fairly flimsy, liquidity situations. And all of a sudden you get a heavy bid or a heavy offer, markets just tear to the downside or rip to the upside. It is downright sketchy on an intraday basis. Like, look, I'm in the S&Ps right now. I'm on a 1 day, 1 minute. Absolutely is nothing is going on here, right? You're doing 1,600 contracts and boom, out of nowhere, just a little bit more hits the tape. Next thing you know, you're moving 4 or 5 points. I got to tell you, earlier on in the trading day, there was a couple of data drops today, but not a lot of like exogenous events. And you're seeing 8 and 10 point 1 minute candles. And there was incidents today inside of the NASDAQ. Don't worry, it's only 50 handles. And we saw this yesterday as well. It is, one sketchy little marketplace out there. And that's what I mean by, the suck before the storm over here. It's a low liquidity mess to where, especially like, we're just looking at the NASDAQ futures and look at the S&P futures. But listen to me, it's everywhere, You're watching Nvidia throughout the course of the day, and there are some alarming moments in here. And this obviously doesn't have its earnings. It's still like an earnings hangover, but there's massive, $1, $2 moves in extraordinarily brief periods of time. And that can be really a recipe for disaster for those of you actually trading on an intraday basis. It's ugly. Again, it's what I call low liquidity, high impact trade. Low liquidity is, there's just not a lot on the bids and offers. And when size actually comes into trade, all of a sudden, boom, this high impact, you just get punched with this humongous move. And I have to tell you, there's no rhyme, no reason. Here's a big reaction to the downside, followed by 10 minutes of a bid back under it. And again, some of this is data related, some of it's not though. So just be aware, again, high impact trade. With that, the data drops. I'm going to jump forward right now and even talk about next week. Next week is just, look, it's a holiday week of trade. So you're going to be Tuesday, Wednesday, Thursday, Friday. And there's a lot of data drops, of course, including an employment situation at the end of the week, right? So non-farm payrolls. Before that, you got, ADP. I mean, we're just loaded. PMI, ISM, JOLTS, okay? Factory orders. Let me tell you, it's going to be a full-on crap fest next week with data drops. And that is exactly what intimidates me because I'll tell you what, you get caught on the wrong side of one of these, even like construction spending. I've been shocked as of late, any of the data drops, how significantly they've moved markets. And even though, like, look, we can all sit here and comment. I'm actually going to move from the 1 day, 1 minute. I'm going to go to a 30-day, 1 hour. Okay, 30-day, 1 hour. Why am I showing you that? I don't care that we're trapped inside of a range. That's why I kind of call it also the suck before the storm. You're getting chopped out, okay, unrelenting moves, and people are getting caught up in it, and they're getting ground up, and it's that's not where you want to be. It's okay to actually cut some size and just recognize you're in a low liquidity, high impact trade. Every one of those data drops. Look, not telling you not to trade. I'm not saying don't trade on an intraday basis. I'm saying you really better set alarms and be aware of every one of these data drops that are coming out. And I wanted to start with that because that's why I kind of call it like a little bit of the suck before the storm. Not only are we in a really tight range over like literally the last 2 weeks of trade. Okay, talk about sucking, right? So it's just over the last 2 weeks of trade, but we're in this really like fast, high impact trade, which again, the two, in my experience, you don't usually get this where you're getting 30 handle moves in the S&Ps, except we're not going anywhere, and that's why it's like it's some high impact trade where we're not going anywhere. Have gone a lot of places to get absolutely nowhere right now over the last 2 weeks, but let's get back into it here. So that was critical to discuss because this is going to continue, this lower liquidity situation, even coming into September. Okay, it's going to get a little wild. All right, September, and I'm kind of working backwards here, is historically and notoriously, okay, the most volatile month of the year. And now throw in the fact that, we have an election coming up. All right, some geopolitical risk, okay. The Fed meeting, I don't even care about the Fed meeting because the Fed meeting to me, look, they're going to cut 25 basis points, yada, 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 unless we get some big, ugly negative data because all of a sudden bad data is bad again. Except, if you look today we had PCE data that came out. You can barely even see where PCE data came out. That's the Fed's, indicator of choice. Oh no, that was one of the smallest moves we saw all day. It's crazy, right? So data drops that didn't normally mean anything, well, they meant something throughout the course of today. So again, wild trade over there. But you got to keep your head on the shoulders during September because, again, historically, notoriously, the most volatile month. Everybody thinks it's October because that's where some of the crashes have actually happened. The irony, though, it's actually September. All right. Let's actually spin back around and talk about, is it a boring week? Well, here, I want to start with the SPX. The SPX, okay, where are we right now? Well, 2 weeks ago we were here and we're right there. So we are massively unchanged on the week. But, okay, conversation pieces, if you look at the QQQ and actually go to auto expected moves, the Qs actually have been riding the lower edge of their expected move. And they caught a little bit of a bid, but they're still lower. So the NASDAQ is actually lower on the week. Predominantly, that move, okay, lower, has a lot to do with, of course, Nvidia. Nvidia actually having a little bit of sell-side activity, a little bit of sell-side activity. I wouldn't read too deeply into that. So that's Nvidia and tech. And again, there's not a huge amount to talk about in here. So Microsoft, what's it done? Absolutely nothing. You bring in Apple. Okay, it looks like, Apple caught a little bit of a bid on Thursday. Apple caught a bid on Thursday because of an AI announcement, but they faded on today. I mean, the Apple bid has kind of faded a little bit. So, one and done over there in terms of the AI. You look at Amazon here. Amazon's on the bid today. That's actually what's lifting the NASDAQ, if you will. Google, there's nothing to speak of. Meta, nothing to speak of. Again, we already covered Nvidia. And of course, Tesla. Tesla, bring up auto expected moves, also closing on the lower edge of its expected move. Now, okay, I'm actually going to come back to tech in just a second. What I want to show you that's actually leading markets right now, okay, are the financials. And more specifically, if you take a look at financials, like this is the XLF, it's ripping. So does it make sense that the financials are ripping when we're about to lower rates? You're like, doesn't make a lot of sense. And typically when you're lowering rates, it could be going into weaker economic times, in which case the financials may actually take a little bit of pain. But the more you dig into this, and I actually want to show you something interesting about this, because the more you dig into it, is it Wells Fargo leading the markets? No, that thing's not at all-time high, right? Is it Morgan Stanley? No, not really. Morgan Stanley has kind of been flat for the last 2 weeks. Is it Citi? It's definitely not Citi. Is it Bank of America? Not really. This thing's still way off of its high, and Warren Buffett continues to sell it. Okay. Goldman Sachs, all right, it's picked up, but it hasn't done anything over the last 2 weeks. That leaves us with basically JP Morgan. So JP Morgan is on the run, but what's also there, okay, is none other than Berkshire Hathaway. Berkshire Hathaway's breakaway, hitting $1 trillion market cap. And here's the interesting thing. Most people are not aware that Berkshire Hathaway is by far and away the biggest component, along with like JP Morgan, but it's the biggest component inside of the XLF and directly responsible. So what's interesting about this is the banks are not faring all that well, but Berkshire Hathaway is. Moreover, okay, bringing up Berkshire Hathaway, I'd be just really remiss not to mention, okay, how much of Apple, and of course everybody's aware, Warren Buffett's selling Apple and he's selling Bank of America, and he's actually at record cash positions right now, which to me is again, maybe that's a little bit of a suck before the storm, if you will, to the marketplace. I think that's a huge blow to the marketplace that, one of your number one buy and hold investors is basically screaming to you that he's in effect moving to cash because there's no good deals out there. Not putting that capital to work, they're putting that capital in cash and actually reserving it for another day. You should think about that in the near future. So the reason I'm actually talking about the financials though, okay, and I covered a little bit of tech and then the financials is, look, here's the bottom line. If you come back to the S&Ps, the S&Ps are not progressing to the upside. Financials are, but financials are not enough to carry the S&Ps. So here's the very bottom line with this. If markets are going to continue to progress, to break out, if you will, into all-time and new highs, okay? Once again, it has got to be technology that's going to be the leader. Because even if you had financials trying to break us out, look how far these things have moved, okay? This is an absolutely parabolic move where we're shattering an expected move and hitting an expected move and shattering an expected move. I mean, it's a phenomenal move inside of the financials. And at the exact same time I'm saying that, it's still not enough. It's not enough market capitalization to actually break us to the upside. Unequivocally, once again, it has to be tech. So I started looking around tech. Apple, not too far off an all-time high, okay, but fully priced up here, okay. Amazon's been getting beaten up. It's a possibility, but Amazon is also heavily involved, obviously, on the retail side, okay, which could actually maybe actually cause some issues down the line because we've seen some retailers, including like Dollar General, having some issues. Google, okay, Google right now to me is fractured and broken because, you've got some monopolistic issues and the department is, Department of DOJ and so forth is going after them. There's a number of issues that are going to be surfacing inside of Google continuously following, charges of monopoly in there. Then we actually look at Meta. All right, Meta, very close to all-time high and could absolutely break out. But the ones that really catch my attention now, okay, are going to be like Nvidia, which is a little bit of sell-side activity in here. This could actually be, all right, something you might want to be long if you believe we're going to break back to the upside, okay? But Microsoft, to me, really kind of takes it. Microsoft right now, which has been relatively quiet, okay, this to me has to be the underlying that gets the big break back to the upside if the S&Ps, okay, are going to progress significantly higher. Now, as I say that, I'm talking about new trade ideas in here as well, okay? It's actually one of the trades I've got on. In fact, the way that I actually put a Microsoft trade on is I bought an out-of-the-money call spread, but I financed it okay, using Catapult. Okay, for those of you who know what Catapult is, I'm actually financing one trade, okay, by selling another. And the trade that I'm selling is in, okay, the micro options on futures. I'm doing a trade that's got about a 95% probability, but it financed 100% of my Microsoft trade. So I'm taking, in effect, a bullish trade, taking a little bit of a flyer on that one. Interestingly enough, I also happened to take the Nvidia trade. Figured, Nvidia's got a little sell side activity, but if the S&Ps are going to break to new highs, Nvidia's actually got to get the bid back under it. Okay. Meanwhile, on the other side of that, okay, I actually took some other Catapult trades. If the S&Ps are going to break down, okay, I took a nice big Disney position. That's Disney position though if Disney starts to break under the 80 level. And again, by the way, you got to pull up like a 15-year chart. Check this out. Disney breaking under 80 would be absolutely spectacular. It's another position I've actually taken also, again, using Catapult. So I'm taking, okay, a couple of what I would current time like flyer, type trades, where when I say flyers, like they're lower probability trades, but the payouts on them are huge. And it's a type of strategy that, look at this, talking about again, low liquidity, high impact trade, right? Nobody saw that one coming. Absolutely huge right now. Okay, we're squeezing into the close, but the type of trades and the type of strategies that I'm using, okay, are for wild and woolly type moves. But again, if the markets are going to progress higher, you got to do it on the back of individual products. It's going to have to be a Microsoft. It's going to have to be an Nvidia. If we're going to go lower, stuff like Disney is just going to crack apart. All right, let's spin it back around for a moment because, again, we've talked a little bit about tech, right? And again, maybe people are not so used to me being bullish. I'm taking plenty of bullish trades, but the bullish trades I'm taking right now, okay, are very, very measured, and they're designed specifically around underlyings that I believe have to be involved. Okay, wow, talk about being involved over here in Microsoft. Okay, that's the last couple of seconds of trade. That, people, is a $2 move in 1 minute, right? Again, this just exemplifies what I'm talking about. And it's not about like news. Like, look, news can come out, absolutely. Okay, this is about low liquidity. And it's making my point. That's why I call it, the suck before the storm over here, because you are getting sucked up in what is some wild, wild trade coming into this holiday weekend. All right. So back to it, some new trade ideas. And as I do each and every week here at TheoTRADE, talk a little bit about expected move. So with expected move, what do we have? Just a moment ago, I was bringing this up and I'm like, we have done nothing. Okay. Well, right now, if we ended the week right here, we are very, very mildly higher. But I got to tell you, give it another 5 minutes, we could sell off massively over here. Now, inside of the SPX, this last week of trade, we had about an $82 expected move. And again, I just want to be able to denote that on the screen, make sure everybody's kind of comfortable with what exactly we are looking at over here. But in this case, it's plus or minus basically $82, right? So looking for an $82 move. Actual move, nothing. So we came down and pretty much hit the lower edge of the expected move. By the way, that little X, okay, we were 6 points away during the trading session from hitting the lower edge of the expected move. Actually, overnight, in a technicality, overnight we really did hit the edge of the expected move. Meanwhile, we're closing out the week unchanged. Even after an unchanged week, and again, about $82 of movement packed in, what are we expecting for next week? Okay, so, as I said, we'll suck before the storm or calm before the storm. What I found interesting is this is, and again, the market's not closed and this is not set in stone just yet, okay, but 7 days out. But we're coming into, again, a 4-day trading week. 4 days, right? So you've got Tuesday, Wednesday, Thursday, Friday. That's it. I was actually surprised. We have almost a $75 move. Almost a $75 move, okay, accounted for next week. And you go, well, why are you surprised by that? Because you only have 4 days. And the volatility, ironically, even in 2 weeks of flatness, the volatility has been sustained, okay? That, again, kind of a sign, if you will, of interesting things obviously to come. Clearly, there's a lot of data points that are going to hit this marketplace. So the market overall, well, making my point for me here, it is chopped out. Okay, I don't even want to use the term volatility in here. Trade feels broken, disconnected, and I'm telling you, as I said last weekend, I'll say it again, there's echoes of volatility that continually hit this marketplace. So with that, look, sit tight, know when your announcements are coming out. It's going to be critically important next week, and expect some pretty serious volatility to hit this tape. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.